Reluctant Preppers provides educational awareness and commentary only. Opinions expressed do not constitute personalized financial advice. Viewers are encouraged to do their own research and seek qualified personal financial consultation before making investment decisions. Does your family ever get exasperated with you for stockpiling such things as paper towels, bottled water, or toilet tissue? Well, they certainly can't object to you stockpiling money. Silver, the only money recognized by the U.S. Constitution, and your first 10-ounce bar of pure silver can be had at spot price with no premium by going to sdbullion.com/rp. And when you buy it that way, you'll be supporting Reluctant Preppers as well by going to sdbullion.com/rp. Thanks. This is a quick update to thank you for building our number of patrons to 76 and growing on patreon.com/reluctantpreppers. Soon, when we reach 100 active patrons, we're going to start sending out a 1-ounce U.S. Silver Eagle each and every month to one active subscriber, so you don't want to miss out on that.
Please help us grow by subscribing today at patreon.com/reluctantpreppers.
As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
Welcome back, Reluctant Preppers. We have a distinguished returning guest who's always popular with our viewers. This is David Morgan, founder of The Morgan Report. David, we also are referred to you as the Silver Guru. Thank you for joining us again here on Reluctant Preppers.
Well, Delegate, thanks for having me back.
Hey, we've got a bunch of viewers' questions which have been submitted ahead of this interview, anticipating that you're going to be here to answer them. So we'd like to see how many of these we can get through in our time together with you, and just appreciate your perspectives on this. And I think I've got one of... Actually, I'm going to ask mine before you had recently posted a public broadcast recommending a special play that people could consider if they want to take advantage of the sudden drop in silver prices without necessarily having to load up on physical silver, which was an interesting option. I'll let people check that out. Maybe I'll put a link to it in our description. But what I'm just circling back with you now, and by the way, for everyone's benefit, this is Friday, August 31st, 2018, and the question I have for you is the play that you mentioned recently in your public broadcast still viable for people to enter at this time?
It is, and it's a risky trade, but I wanted people to kind of get a feel for what they get as a paid member of the Morgan Report, and this is what I do for our membership. And so, they want to know, well, exactly what do I do? So I show them exactly what I do. So this was very specific, and yes, as long as silver remains at this level or that particular equity is at that price point, I'd say, yeah, it's probably viable to do. Does that guarantee it's going to go up? No, but if you got my average price to where it traded at Thursday, we're already up 10%. So silver has certainly not gone up 10%, but this particular stock has.
All right. Well, I'm going to move on to viewers' questions here, if you're game. We
Sure.
have this question supported from that was submitted by Naamin, and it is: does North Dakota really have their own bank separate from the Fed, and what are the implications?
Yes, they do. You can Google it and probably get a better answer than me, but who's the lady that wrote Web of Debt and is very big on state banking? I can't recall her name. Forgive me. And I've actually had some direct correspondence with her. Anyway, she does a good job of it. And yes, you can in certain states have a state charter for bank. North Dakota is one such state. And it basically has everything that's legal. And yes, it's basically what we used to have more or less under the Glass-Steagall Act. Before Bill Clinton repealed the Glass-Steagall Act, there were two types of banks. There were commercial banks and investment banks. Investment banks are basically for gambling or investment, which would be like a Goldman Sachs. These were people that did offerings of a new startup, IPOs, some new venture, a derivative product, anything that had to do with basically the derivative world or the investment world. Separate from that, and a distinct wall, metaphorically a wall, between investments and commercial, was a commercial bank could only basically do stuff that was proper for the physical economy, which would mean construction, farming, or merchants. So you would have we used to have merchant banks. That was the name of several banks.
Yeah.
The XYZ Merchant Bank, or the San Jose Merchant Bank, or the Merchant Bank of San Jose, or whatever. So that prevented, after the 30s, when the law was enacted, that any of this gambling would not hurt the normal people that really were not investors or just basically were making a living and that kind of thing. Well, that all went away with Bill Clinton. So now all these banks are basically gambling away your money, more or less. And if they fail, then you have to bail them out as well. So they're in a no-lose situation. They can gamble as much as they want, as hard as they want, leverage as long as they need to. They can put derivative on top of derivative, and it all blows up like it did in 2008 in the housing market. Then it's your fault, not theirs, and you get to pay for it. So I went off on a tangent, but I think it's an extremely important tangent for people to understand that banking in and of itself isn't bad, but when you have a state charter and state-run bank that basically is run like a merchant bank, it does mostly good. And these are type of people that are what I call real bankers that you might have seen, let's say, in the 40s and the 50s, perhaps into some of the 60s, where they were prudent. They acted as if almost were on a gold standard. In other words, money was valuable. You spent it prudently. You only got a loan if you qualified for it, and you basically were doing something productive that would help society at large. That was basically the idea of prudent banking. That, of course, has been long gone. So, yes, it does exist. It could certainly help. But the problem is that even with a state-chartered, state-run bank that's run in a prudent manner, it's still under the Federal Reserve System, meaning that they can't create their own currency. So whatever happens to the U.S. dollar, regardless of how well run that bank is, they're still at the whim, I'll say, of whatever takes place in the destruction of the currency, either up or down, basically. So they're not exempt from that point of view, but they are a much better run bank, a much better run entity. So probably just nailed that, but I really wanted to nail it.
Yeah, thank you. I appreciate that.
Don't understand, how badly this thing is distorted from the original intent.
Underscoring one of the points you made about banks now having the license and the liberty to do basically reckless speculating with depositors' funds. We had Lynette Zhang on recently talking about inter-fund lending and the rules that allow, and more, just a huge increase in that between mutual fund families, where you may have a real so-called conservative sort of preservation of capital fund, and in the same fund family you have some venture funds and some sort of things, but they've got inter-fund lending set up between these so that if one gets in trouble, they can just borrow from you to pay Paul. So we've got another question here from SureStack, and this echoes a question we asked you in a previous visit about the gold-silver ratio. This is, what gold-to-silver ratio are you looking for before making your next big trade? And would you trade gold for silver or silver for gold? Do you see it going much higher than where it is, around 82.5 to 1?
No, 80 is usually about the top, and I know it's 82. I usually look, 72 is about it. I'm not looking at a chart right now. I might vary that somewhat, but I want the market to prove it to me. That's how I've traded for years. The way I trade is extremely simplistic, and some people that become paid members get a little upset with me because of the simplicity. But if you can make something simple, it's called elegant. And I've looked at all the indicators. I mean, there's so many out there. But basically, I have what I call the Morgan rule. And it's got the market has to do a certain amount of proving to me that it's changing direction. And once it's proven that, then we enter. And once we enter, we have about an 85% probability of winning. So right now, just off the top of my head, without looking at the chart, I might pick a different number, but roughly, I wouldn't do it at 82. Try to pick a top as for amateurs or bottom. But I would let the market show me, and that I think is around the 72 level. Certainly, I'll be trading gold for silver.
And we have a perhaps related question from El Galazano 310. This is a long question, but it gets to an interesting point. I'm a retiree in my 70s who has a large percentage of my meager savings in silver bullion. It could not be more obvious that silver is in an inverse bubble and that it is held in it by the powers that be, naked shorting it with enormous market order sales on the COMEX and London, usually when most of the world is asleep. Traders would never do this, as these market order sales maximize their losses. Only an entity that could print pseudo money out of thin air would do this. The only thing that will allow physical PMs to return to fair market value is breaking the intentional conflation between paper PMs and physical. Any other analysis of the situation is, in my opinion, a waste of the little time I have left. Your comment.
Oh, I agree totally. I've always said that the physical market will have to dominate the paper paradigm. I agree.
Another one from Inside Nyanda Speaks. Is there any historical examples in the modern era of consumers buying assets with gold or silver, or does the owner of precious metals have to convert the precious metals to currency before purchasing assets?
No, you can definitely use a direct purchase with, silver or gold. It just has to be two parties in agreement. In fact, if you look at some of my earlier work, the state of Utah, for an example, I was there when the government signed this into law, that any two parties in the state that wish to transact with gold and silver can do so as long as they both agree. So there's a whole state that does it. And further, and I don't want to oversell the membership site, but inside the membership site, one of the special reports we have are how to do gold and silver contracts. So you can, at law, totally legal, not doing anything untoward, you could set up a relationship with your employer, for an example, where you are paid in gold or silver or both. And it's totally legal. So there are ways to absolutely do it. Is it common? No. Is it more cumbersome? In most cases, yes, but certainly you can do it. Going a step further, if you go into like Argentina, which I've been to, I would say several times, but more than once, South America several times, Venezuela I've not been to, but Argentina and Colombia, Brazil, Bolivia, Peru, Chile, and a few more probably. They are in distress, or the ones that are in distress, like Argentina, over and over again. You can use like a silver necklace and make a trade. Of course, there's a little more looseness to the system than there is here. It's a mindset more than a problem at law.
It's interesting because as you just mentioned that, it made me think about the Cashless Society, how difficult it is for the newer generation in particular to imagine living apart from the convenience of electronic transacting all the time, either through their debit cards or through their phone pay or whatever. But as you mentioned, it's almost a lost art. This attitude of having something in your hand that you can use that's actually the thing you're exchanging for.
Yeah, and I don't want to belabor this too much on a limited time, but I had a couple of interviews with a guy from Argentina. He also wrote a great piece on what it was like during the last crisis, not the current one. And he said if he had to do all over again, he would have bought more jewelry than coins, which is probably good for Argentina, not necessarily so in the States. We don't really know. The point being is that the smaller is easier recognizable, and it just worked better in his circumstances. So I thought that was very interesting. I'll just pass that along. I'm not advocating. Of course, you don't ever want to overpay for jewelry. Almost all jewelry is marked up in the States 100%. So if it's got $10 worth of silver in it, you're going to pay 20 or 25 for it. Don't do that. I'm not recommending that. What I am saying is if you can buy jewelry at melt value, then you might consider it. I want to be clear on that. Hopefully clarified it.
And speaking of forms that you can, or ways that you can hold or store your precious metals, this next question is from Ramiro Barco. He asks, or she asks, is it a good idea to have silver in shared accounts that should have the metal there, or is it better to have it real and at hand?
Always in your hand. I mean, there are instances such as myself and others where you have enough where you might want to diversify it out of a jurisdiction into another country, or maybe store some, but you got to be very, very careful. I do not like to go on public as saying where I would store, because most of these guys that are large, even the wholesalers, but mostly the retailers, I'm talking the big guys everybody knows by name. Some of them I don't agree with their storage facilities, but they're friends of mine, so I wouldn't say it publicly. But if you come on board you wanted a consultation, and I'm not saying this person is at that level, I don't think they are, and I'm not trying to push it. Just in hand is always best. If you all have got a great quantity, then it makes sense not to have it all in, let's say, your house or your office. You might want to diversify out of there.
We also have a couple of questions that are along the theme of the direction of the market. That's got to be a common question that you answer. And specifically around the recent drop in silver prices. And I know you've given a couple of interviews recently where you've talked about that it's difficult for anyone to really declare definitively, but that you've got your thoughts are that whether we are at or near a bottom in the near term for precious metals. But why don't you go ahead and address that one?
Well, I think we are. I mean, you never know until you know. I mean, I'll go back and stab myself in the back. I mean, there was a spike low, which is what I just did that tutorial on for the general public.
Yeah.
And I happen to know numbers, and I'm good with them, but it was a spike low to 1817. I forget how many years ago it was, a couple of years ago anyway. And I said, that's it. That's a spike low. And I was right. That low, that spike to that level, $18.17, was the lowest price silver was for 14 straight months. So I was right for more than a year, and then I was wrong. So is that the same case here? I doubt it. I think if we're going to make a new low, then it'll probably happen fairly rapidly, meaning within the next couple months. One thing there's a couple of things that concern me is gold is broken down, as well as silver, which we both know, but on the monthly basis, it doesn't look good. Gold needs to close this month, and I guess we're doing this as the month close. I think if we close over 1,200 or 1,205, I have to look at a chart. That's technically neutral, but if we're in the 1,100 area on the close on a monthly basis, that is bearish. And also point and figure, and I'm not going to go into point and figure, it's kind of sophisticated, but it's actually a simple way to look at any market. And one of my friends that I'm going to interview on our mastermind series coming in the next couple of months does point and figure analysis, and he's pretty much on the same page as us. 10 or 20% should be in the precious metals, and the rest you should have in wherever. And he just sent me an email basically apologizing. He goes, but hey, my work is my work. I still philosophically love gold, but the point and figure analysis says I've got to get out of gold. And so that's just something to bear in mind. I'm not saying, and I know Jim Rogers, I'll just mention as it came to my mind, said recently on an interview with Kitco that he thought, he's waiting for gold to get under 1,000. When it gets under 1,000, 950 is the number he used. He'd be loading up. He says, I'm not smart enough to know if it'll get there or not. And I'm not trying to be contradictory to Jim Rogers. I only shared the stage with him once in my life. That was an honor. But he will admit he doesn't know and I don't know. I think this is it, but time will tell.
Yeah, just to make things a little bit muddier, the close today on gold was 1201.11. So that's pretty dang on the line.
On the line, I'll have to look, yeah.
Yeah. And then one more follow-up is about the viability of ongoing mining in the precious metals at these prices for this long. We've talked in the past about what is the real cost of production, and you said that's a tricky number to pin down because some of those are byproducts of mining that they're doing anyway for other things. So for silver in particular, how viable is it for them to continue producing silver at current prices?
Yeah, it is difficult because you need to look at each mine on a case-by-case basis, and some of the better mines I won't name don't account for their taxes properly, in my view, meaning that they might have a carryover loss that they can use so they don't have a taxable event, and that means their all-in sustaining costs are lower than they would be once they're making a profit and have a taxable event again. If you look at something like a Silver Corp and you look at their credits for lead and zinc, I mean, they're mining silver at something like, under $2, but they're also mining lead and zinc, and it all costs. I mean, it costs to go in and drill it and muck it and rake it and pull it out and get it in a hopper and, transport and all this stuff. But generally speaking, most of the primary silver miners now, with the exception of about 3, are underwater. And the other thing that most people don't know, and I did this with one of the best in the industry, I had an interview with them. It's again in the special report section of the Morgan Report, portal, the membership site, is Archie's Rule. And Archie's Rule is an interview I did and also a graph. So if you are in a producing company, meaning a gold producer, silver producer, platinum producer, lead, zinc, copper, whatever, you can actually look at this curve and see what the current price is of that commodity and whether or not it's viable ongoing business or not. And it's I got a rule of thumb I won't give on the air because it took me too long to get this interview done and make the curve and everything else. But you want a pretty good margin in this business. Remember, it's very oil dependent, which means that any increase in the price of energy is going to go right to the bottom line, and it's going to cost more to produce any commodity that comes out of the ground. And so that's something to bear in mind. And also, to belabor this point a little bit, a lot of people go, well, if they're producing at 18 and the cost is 14, why don't they just shut down? And it's a long answer, but it's actually cheaper sometimes in the long run to keep going at a loss, $4 per ounce loss, as in this example, because once you shut down a mine, it's very hard to restart. Plus, there's usually restrictions in the contract, which means that they have to give the workers, 60 days, 90 days notice. They have to pay them. Once they turn off the power and everything, mines deteriorate pretty quickly. So basically, the best mines that are viable will just go on, not care and maintenance shutting down, but they will just narrow down to the bare minimums, no overtime, no special anything, and just keeping on for a while. And I didn't understand that years ago. I understand it now, but it actually physically and fiscally, I meant to say, makes the most sense, even though it might not sound like it. But unless you're in the mining business, it'd be like any business, basically. I mean, let's say you have I don't want to belabor this too much, but you got a sandwich shop and, for whatever reason, things are bad and you used to, be just swamped with business and you had to hire more people and stay open an extra day. Well, of course, you get rid of those other people. You only work, you only do 5 days a week. And instead of having, 17 different sandwiches, you narrowed it down to 6. I mean, that's maybe a crude example, but that's the idea. But you could stay in business for a while, and hoping or knowing perhaps that business would improve over the next few months or half a year or whatever.
So it isn't a simple question, and it sounds like a simple question, but it really isn't.
Very complicated question. Yeah. I mean, especially, let's say you're a conglomerate, and you've got 6 mines. Well, there you can put a couple on care and maintenance and have the high ones, the ones that have the lowest cost going. But there you're basically high grading, which is, going to keep the business alive, but you're getting the best ore out of the ground at the cheapest price, which, can shoot you in the foot long term because, once you've mined out the best of the best, then if things get hard again, you don't have that to go fall back on. But it's not an easy business.
There's an interesting question here from Deadly Wound says, the United States debt clock has silver price listed at $571. I think that was a little bit out of date. Why, when, how, and who the heck believes the government won't stomp all over it if it shoots up? Too many industries will scream bankruptcy. I've been waiting 20 years for true market value, and the only thing going up is therapy.
No, I mean, first of all, that number just comes out with the amount of ounces that are mined in the United States versus the amount of money printed. So it's just a basic arithmetic problem. It's a division problem.
I see.
So that's how they get the number, and it's an accurate number, by the way. But most things that use silver use such a small quantity, and they take my 24-karat gold-plated iPhone 7. That is 24-karat gold-plated. You take the amount of silver that's in that iPhone, and it's like, I don't even know. It's like 1/100th of an ounce or 3/100ths of an ounce. So if silver went to $700, the price of this going into the iPhone, the amount would be minuscule. And what he said may be true as far as what goes on the mainstream fake news, that, we can't do this, silver's gone up. But in almost all conditions, a refrigerator, a television set, a phone, a computer, any electronic device, there's so little silver, solar panel, there's so little silver used relative to the price of the overall commodity. Like, let's take a refrigerator. I don't know what they even cost. Let's say $1,000. It's got maybe $10, probably $5 worth of silver in it. So if that price went up tenfold from 14 to 140, you'd be looking at $50 on a $1,000 item. It's not really going to affect the price. Again, they might scream that it is, but it won't. So he's mistaken on that. He should take a look at the early work of Jerome Smith, Silver Profits in the 70s, Silver Profits in the 80s, the coming currency crisis, some of those books, you probably get them for pennies because no one wants to read them anymore. Maybe you can get them on Abe's books or something like that. Get a little bit of an idea of what an inelastic supply-demand function is, because it's inelastic on the demand side. It means it has to be in the product, but it costs so little relative to the overall cost of the product, it's meaningless. So I hope I answered that question. I hope it's understood.
I think so. And we've got one last one. This is a real basic one that gets asked almost every time, but there's a little different spin on it. This is from Brian Callahan, who asks, I know you get asked this all the time, but what is the correct amount or the safe amount of silver and gold for a family of 4 in a collapse scenario? And he goes on to talk about what the forms that he holds his gold and silver in, and just talking about what's an appropriate holding of precious metals for someone who wants to really have this sort of an insurance policy at a family scale.
Yeah. Well, I love that question. I don't have, it's always, there's no one size fits all, but the way I look at it is most financial planners that don't know anything whatsoever at all about monetary systems, how this one's set up, all they're taught is what they're taught in school and they regurgitate it out. But some of them, have good hearts and they mean well. They just don't have a good basis of reality. That's my strong opinion, and it is an opinion. But if you look at what they'll tell you, they'll say we'll have 3 months worth of savings, or sometimes 6 months. So if you look at the real value of silver, value, not price, it's basically an ounce is roughly a day's wages. So if you look at 30 ounces, that would be a month. So if you look at 90 ounces, that would be 3 months. So I have come to the conclusion that 200 ounces of silver is probably great for the average family of 4 because it represents 6 months worth of value if things hit the fan. Because what will happen in a scenario like that is it will go to its value or higher than. So you could take that same number in dollars, and fictional dollars, these Federal Reserve notes really, and use the appropriate amount of gold. I think, the scenario he's laying out, probably better to have silver than gold, but gold certainly doesn't move around as much as silver. It's less volatile by a long shot. But I think that's a good answer. The problem I have with a lot of people is when the Morgan Report's looking to, take that 20% that you devote to this sector, the resource sector, and maybe half of that's in the precious metals, the rest are in opportunities like, other opportunities, lithium, cobalt, vanadium, the stuff that we study and report on in the Morgan Report. And we make you more money with that 20% than you make in the 80% in your other holdings, and that's the goal. Do we always accomplish that? No, but we certainly kicked it in from the time we started all the way through 2011. And then even in this downturn, Trevally, you look at Trevally Mines, it called the zinc shortage way before anybody else. That stock doubled, we got out of it. Well, double in a couple of years is pretty good performance. The only Explorer that I have has doubled this year. And they just put out a press release that we're reporting on this weekend. When the Morgan Report comes out, it's going to be posted here in a couple of days. And they just tripled their land position. So here's a stock that's already doubled for us in this rotten market. And silver hasn't done that. And, I don't want to belabor the point because I always taught everybody, and I will continue to do so, buy real metal first. I don't want you in the Morgan Report if you don't own physical metal first. I just don't. However, I've always made more money in the paper markets because, do you want the egg from the golden goose? Or do you want to buy the golden goose? If you buy the golden goose, you get an egg and another egg and another egg and another egg, if you buy the right goose. But that's the point. But without the physical market, in other words, without physical metal, which is fine for most people, like that one we just outlined, that person has no business being in the stock market at all. And I know that. I wouldn't accept him, really. If I knew it, if I knew who he was and he talked to me or something, I'd say, no, just stick to stacking silver and have a happy day. But for those that are ready for the next level, that's the best place to go. And you get the best leverage in properly chosen cash-rich, unhedged mining companies. And there's a subset that makes money regardless of the price up and down movements most of the time. And that's kind of fun.
We've been talking with David Morgan. He's known as the Silver Guru. He's appeared at uncountable conferences and on many interviews. David, thank you so much, as always, for joining us here again on Reluctant Preppers.
Well, thank you, and holding my feet to the fire, Dunnigan. I think I answered everything where it's understandable that One about, the government bashing silver down if it goes high. They have a lot of control. I mean, I think everyone that follows your work or follows your channel knows that. But believe it or not, it may not be as much control as many are led to believe, because the markets always come to the fore over time. And we already saw it in 2008-9 when we hit the bottom in the metals. They roared back, and the physicality took over in the retail market. You couldn't buy silver without a 30% premium. Gold was at a 15% premium. And some dealers, and you can check with Andy Schechtman to make sure I'm not making this up, but he said it in front of me a couple times and on stage several times, and we don't always appear at the same conferences, but sometimes we do. Point being is he thought he was going out of business because he could not get metal from the wholesaler to sell. And he's in the gold and silver physical market only. That's how tight it got in the 2008-9. So if we have another event like that, think about it. Would it occur again? Yeah, I think it could. In fact, it could go into the whole market, meaning the silver market generally and the gold market generally. Because the next rush or run to gold, in my studied view, will be greater than the one that we saw at the bottom of the 2008-9 mine crisis. So we'll see. Time will tell.
Well, David, thank you for that final thought. And as always, we really appreciate you joining us here and for being willing to be a good sport and field all our viewers' questions for us.
My pleasure. Thank you.